it's small, but big data.
Right.
And we've got some really kind of cool people working on this stuff, that it brings to light things that you hadn't thought of. And once you kind of see those data maps and see kind of hotspots, whether it's a particular network, whether it's a particular administrator, a particular deductible or contract type, it becomes very telling, very glaring, and you're like, wow, how did I not see this before? And you won't.
Hey, everybody out there, Vince Lewis with the Partners Podcast. Hope everyone's doing well. Hey, I'm really excited about this because, you've seen us do a few internal guests with partners and then some outside guests. But next few episodes, you're going to see us really get some interviews with our team within partners. And so our first interview is going to be with a person who I like affectionately know as G Money. Gary Hudgins, our Vice President of Underwriting, who's joined us for the Partners Podcast today. Gary, welcome.
Thank you. Good to see you, man.
Gary, I always like to start this off, especially with folks in our business. I have this saying that we didn't find insurance found us, for lack of a better word. So talk to me a little bit about how you got into the insurance business, and then maybe a little bit more elaborate on how the opportunity with partners came up.
I got into insurance long enough ago that I actually answered an ad in the newspaper.
Oh, geez.
And
that's like me.
I saw an advertisement for a job for an actuarial analyst. And I said, I have no idea what that is, but I know it's numbers. My degree's in financial management. I've always been good with numbers. I sent off a resume, didn't hear a thing, and to be honest, I forgot about it. And a couple months later, I got a phone call and said, we'd like you to come up. I was living in Tucson at the time. And I got a phone call and said, we'd like you to come up to Phoenix and interview for this job. And I said, oh, that job. Okay. Right. I came up, I interviewed with these guys. I think that went okay. I drove all the way back down, 2.5 hour drive back down to Tucson. I get there and I actually had a message on my answering machine, which none of us have answering machines anymore. Right. And it said, oh, well, that went great. We'd like you to come back for a second interview tomorrow. And I was like, I got to drive up to Phoenix again? So I did. I drove up the next day back to Phoenix. I had to take a very detailed math test. Oh, wow. And I said, all right, I think that went well. And again, drove back to Tucson. And I had a message there. And we like you, and we'd like to offer you the job. And this was a Friday afternoon. And I said, that's great. When does it start? Monday morning. So,
what day was this again? What day was this?
This was a Friday.
A Friday, and they wanted you to start.
I literally moved that weekend up to Phoenix, had a friend I could stay with, and started work Monday morning. As we kind of drew down the fully insured product, our self-funded block was growing, and I could hear the underwriters talking about, spec and ag, and I said,
what's this stuff?
What is that?
Right.
And I went over and I said, oh, we'll teach you all about that. And so I went over and sat one day, and I really liked kind of the interplay of the mathematics on it. And I sat down and said, I can do this, and got some semi-formal training, a lot of OJT. Right. And then I went over to Cigna and worked at a big carrier. Really, it's kind of their self-funded specialist. So yeah, kind of learn all the products with the minimum premium to whatnot, and this is even prior to level funded. And then I got a phone call one day, and HCC was opening up an office out here, and the guy running that asked me to come out and kind of head up the underwriting there. And then ran into Mark Martell, oddly enough, in this exact building, and he said, hey, you got a minute? And I did, and we sat down and talked, and said, I've got an idea, and we literally, kind of a back of a napkin thing, and you sat down with our CEO Brian Miller, and me, him, and Mark, and just kind of hatched this out and gave me a spreadsheet in a weekend and said, hey, work these numbers for me and tell me what you would need to build out a company like this in scale. And that was it. That was kind of the birth of Partners MGU, and that was around Thanksgiving of 2015.
Tell us a little bit about the underwriting department here at Partners and what it entails, what type of volume are we looking at, those sorts of things.
It's been truly, I mean, nothing short of amazing and kind of mind-blowing, really. When you start a company, it's very different. You don't walk in and you don't see nice Partners things up on the wall
right.
and letterhead and stuff like that. We created all that. So when you got into, hey, you're one of the founders of the company, that you cannot even imagine the level of work and hours that we put into it and getting the right people and building the company around us. And literally every single person in this company has been handpicked, hand-trained by us. And, there were no manuals. We wrote all those manuals. There were, none of the training materials and things like that. And so we've grown from, me, Steph, and Steve to, 30 underwriters right now, roughly. Yeah. And you grow the premium. You've got a complete, claims build out, obviously a sales department. You've got operations. You've got, 4 medical nurses on staff. We've got cost containment, clinical review nurses. So I mean the entirety of it, the magnitude of doing it all is pretty wild. So very proud of what we've done. It definitely came from a lot of blood, sweat, and tears,
Sure.
And so a lot of work.
No, I know it's been pretty crazy, because I think when I joined the company, early 2017, I think we were 14 people or something, give or take around 14 people, and now we're up to close to 70 employees.
Yeah.
It's been nothing short of amazing. You're absolutely right.
But yeah, I mean, we did a couple hundred RFPs, we did 1,000 RFPs, we did 2,000 RFPs. Right now, RFP volume coming in the door, 6,000, 7,000. That's a lot of RFP activity, and so that's a lot of quotes to get through. Whether the quotes make it out the door is a different matter, but that's a lot of information coming into the company that you have to do something with.
Yeah.
Either it's a fit or it's not a fit. If it's not a fit, you need to talk to your producer and explain why that's not a fit.
Yep.
I'm a big believer in probably being over detailed in getting back to them. I mean, every RFP to our producer is gold to them, and I want to give them the same courtesy. They were courteous enough to send me an opportunity, and so we owe them an answer and a proper answer.
No, absolutely. And I think you mentioned within we've created this, for lack of a better word, this farm system of organic underwriters that we've helped develop. I mean, I just did a interview with Stephanie Nample last week, and we just talked about how things are being done that insurance companies typically do, where you train underwriters from the ground up. You don't see that happening in MGUs. Usually they're taking the route of acquiring talent and hoping that they know enough to be able to
carry the load.
Carry the load, exactly. In your role, you operate kind of like, I like to look at it kind of as the sales side of underwriting, marketing underwriting aspects, versus Steve Kolb, our chief underwriting officer. He's more on the technical end. What's your philosophy on relationship management, and how have you been able to impart that knowledge onto our younger underwriting staff? Really,
it's kind of you have to teach them the number one, stop emailing, pick up the phone. That these are personal relationships. A lot of and it's different role depending on where you are, kind of in the food chain. A lot of the relationships that I've had or have, I've had for 20 plus years. These are friends of mine.
Sure.
And so it's a very different thing, that I'm not following up on a quote. I'm saying, hey, John, how are your kids? And, God, can you believe it? They're in college, or, you don't just rush right in that, how do I look on these 3 quotes? You're not just doing quotes for this person. You're creating a relationship. You want this guy to want to work with you, to want to build a block with you. And the only way you do that, I mean, you get You have to be available. You got to be personable.
Right.
They have to like you. You have to show that you like them too. And there's give and take.
Right.
I understand, sometimes there are favors that are requested out there, but before I can do favors, I got to make sure that I have enough business on the books, profitable business on the books that can support that. When, hey, I really need you here, that, okay, this guy has helped me out in the past, or woman. It's important to kind of relay that to I hate to call them the younger kids, but they are, a lot of them are, this is their first job out of college or second job out of college, whatever. But they are younger. And so it's hard to coach people in the process of relationship building. It's different for everyone.
Yep, absolutely. I mean, as much as we like to think that the industry has changed, and it has changed a lot, right? But at the end of the day, it's still founded and steeped in relationships.
It is. I mean, it's with the nature and the volume of the RFPs, it's a transactional business for sure.
Right.
And I don't like to think of it that way, that, low cost wins. There's more to it than that. And that's where you really need to look at your carrier partners. The paper is the policy,
Yep.
Mirroring the plan doc. How are you on claims payment,
Yep.
Claims turnaround time? And quite frankly, I mean, we boast one of the best turnarounds in the country. And so it's no longer, just about partners and our business model, and we're a little bit different. I get that. At the end of the day, it's working with a company that is going to do all those things. You don't want your client yelling at you that, hey, what's the holdup on this claim?
Right.
Well, typically, if there's a holdup on the claim, it's because it wasn't sent in correctly.
Yeah.
But at the same time, you need to work with those partners to help coach them to get the information in correctly, completely, quickly. And you do that by having a great detailed knowledge of the administrators and the plan doc and what are the nuances of the claim.
Yep, exactly.
Has this been looked at thoroughly and properly?
Right, exactly. You mentioned two things that I thought are pretty telling in terms of at least your own approach to relationship management. You talked about flexibility and reasonability, and I think some of it's entailed in what you just commented on. Can you delve into that a little bit and what that means to you specifically?
Flexibility means answering your phone at 10:30 at night. When you've got a partner that has a problem, it's always being available, and sometimes that's just how it is. I haven't been on vacation in 20 years. Completely. Well, I guess a couple when I was
understood
on an ocean, but
right.
But for the most part, you're available, and that can be tough sometimes with a family. There's flexibility as far as like your personal time, but there's flexibility within the system and being reasonable of give me something I can work with. You can't send me a group that has 5 years of $1 million losses and has $250,000 of gross premium,
Right.
and convince me that this is a good deal and this is gonna be okay.
Right.
It's not. It's
Right.
not going to be okay.
Right.
And so that's where you got to be reasonable about it. Of give me something I can work with, and you got to have clay to mold and kind of fix the glitch, if you will. But there's certain things that you can't help, and you just can't do anything about those situations other than has to have the premium to support it.
Even as a salesperson, I think I got to be reasonable too, because of course we always have that dichotomy, right, between us of
the uncomfortable give and take.
Right, the give and take, right. Our need to sell versus your need to write profitable business, but we all want to. At the end of the day, we all want to sell, right?
Hey,
so
we're competitive. We all want to win.
exactly.
And it's no different than our clients and our partners and the clients that we underwrite. I mean, they wouldn't be self-funded if they didn't anticipate on winning as well.
Yep.
So business, all sides have to be made whole and happy. And so there's not, you're not going to write 100 cases at a 0 loss ratio. It doesn't work that way. But it has to have a reasonable, balanced approach.
Last question for me: where do you see the science or the art of underwriting? I rather call it the art of underwriting going into the future. It seems like, and even within partners, we're doing more in terms of using data analytics to make better informed decisions. But I wanted to get your take on where you see the business going in the future.
It's small, but big data.
Right.
And we've got some really kind of cool people working on this stuff, that it brings to light things that you hadn't thought of. And once you kind of see those data maps and see kind of hotspots, whether it's a particular network, whether it's a particular administrator, a particular deductible or contract type, it becomes very telling, very glaring, and you're like, wow, you know, how did I not see this before? And you won't, you know, and it doesn't work if you have 3 data hits.
Exactly.
You know, you need 1,000, you know, you need a couple thousand, and that's just the very beginning. So, I mean, we've been doing a lot of data mining, and fortunately, a lot of carrier partners have shared information with us, and it's kind of cool when you plot that out on a kind of a bigger map of like, you know, it's not just you, you know, this is a problem in general, and then you got to look at, you know, what needs to happen to kind of fix those things, or how do you steer clear of certain, there's landmines, you know, there's landmines that are out there, and you just need to make sure that you don't step on them.
When everyone can share and look at data and analyze it and then help combine like their data with our data to help make informed decisions, at least adapt, so it becomes an argument of, hey, like you said, the case you mentioned, like the case that's lost millions of dollars with $250,000 in premium. Well, here's why. I mean, aside from the obvious, here's some things you could do differently, though.
Yeah, I mean, it behooves all of us, and you know, and there's a lot of, you know, top name carriers out there that post a lot of different stats, you know, pharmacy spend and things like that, and I think it's good. I mean, everyone needs to be kind of looking out for that, and quite frankly, I mean, there's some programs out there that couldn't handle a hit, you know, of that magnitude, of literally wipe you out. You know, you're out of business. And I don't think anybody wants that. I mean, it's not good for our industry. It's not good for those people. And, you know, as we all know, we all get recycled at one point or another, and have all worked for many different companies and many different roles. So it's a lot more intertwined than I think a lot of people think.
Sure, absolutely. Man, this has been a blast. Thank you.
You're welcome.
Thank you for joining us.
It's good to see you.
Absolutely.
It's great to be back here, and truly it is. So it was fun just kind of walking in the door and seeing everybody.
Exactly. Going to see everybody. Exactly. I had the same feeling.
I had to make the rounds.
Nope. Totally understand. Well, again, Gary, thanks again for joining us on the Partners Podcast.
Oh, thanks for having me.
Be sure to if you have comments, to like, enjoy, subscribe, please, and we'll see you next time on the Partners Podcast. Thanks.